Happy Friday, just after 3 p.m. time for the final hour. What we have here for the subject is crazy week on tap. Next week is a pretty big one. We are wrapping up the month. July 31st is going to be on Thursday. We have the August 1st tariff deadline. We have non-farm payroll. We have FOMC on Wednesday with the Fed. Likely going to be a pause, but enough to get the markets moving and shaking based on possibly what Powell says. Obviously there's been a lot of pressure from Trump and company on cutting rates, possibly an FOMC dissent on Wednesday. I'm not sure if there's a dot plot on Wednesday as well to see where most of the Fed officials are at. And then we have big earnings week next week as well with MAG7 sprinkled in. We have Apple, Amazon, Meta, and Microsoft all next week on Wednesday and Thursday. So let's have a look for earnings next week. Here are some of the highlights and notables. Monday after hours, Waste Management. And we have United Health Group, which is UNH. They've been beat up really badly this year. Let's see if price is going to look better. Maybe not. SoFi, which has actually been performing pretty well. I've been tracking some SoFi. I have some shares of it. Let's go to SoFi here. SoFi is up to over 20 bucks. It's been a good comeback trade. I've been holding SoFi since these lows in the single digits, like $6, $7, $8. And it's been a pretty good comeback trying to get back to these $20+ kind of SPAC levels, which opened up around 12, ripped up to 28. A lot of consolidation here with the floor around 14 up to 24. If this is wave structure, this might be a 1, 2, 3, 4, 5. We might have a bit of a correction here before this resumes. So I still like SoFi in the bigger picture. I don't know how much more aggressively I would like to hold this thing, but if we get up into $24, $25, $26 to be safe from holding this thing in the $7, $8 zone, that's a pretty good return on capital. I'm not looking to go too much higher than that on SoFi, at least for the near term. What else? That's SoFi, PayPal earnings, Boeing earnings, UPS earnings, Spotify earnings, Merck, Procter & Gamble, Visa earnings, Starbucks earnings. Seagate has been a high flyer this year post the April lows. Cheesecake Factory, Caesars Entertainment, that's your casino. Altria for some defensives and some low beta stocks there. Kraft Heinz, same thing. Etsy sometimes is pretty earnings sensitive. Hershey has actually been beat up pretty badly. Harley Davidson. I don't know, maybe. I'm going to price out a lot of these next week and see if I can find some good trades. And then we get into the big swingers, large mega cap, Meta, Microsoft on Wednesday after close. Robinhood has been, one of the better performing stocks in 2025. Looks like they can't do anything wrong. Traders are super active. Robinhood is benefiting. They're in the crypto space. They're in the 4.5%. They have subscriptions. They have tons of users now. They've just made a heck of a comeback since their initial IPO / SPAC just a couple years back. What else? Qualcomm watching. ARM Holdings watching. Roblox, pretty earnings sensitive. MasterCard, stated consumer. More mega cap, large mega cap. We got Apple and Amazon on Thursday. MicroStrategy, Thursday after close. Coinbase after close. Reddit after close. This is all on Thursday. So we've got some big ones. There's a lot of market cap to be swung around. We also wrap up the month. That would be Thursday the 31st, and then Friday the 1st. We have ExxonMobil, Chevron, and we also have non-farm payroll that morning, and we have the official tariff deadline on the 1st. I don't know if the market's really, planning on August 1st being a big deadline that's going to be a mover, right? Like we kind of run into this melt up through the end of July, and then we start to seasonally correct. I think technically we have to have a correction. I keep talking about this. Look, the melt up's fine. I'm just looking at kind of selling calls into this melt up and trying to stay out of the way. It's so far been doing pretty well. I mean, we've closed out a lot of winners these last few weeks, even with the market melting higher. We've traded it kind of both ways. So we've enjoyed the melt up by selling puts. We've enjoyed the melt up and the slow melt up by selling calls, and we benefited kind of from the up down. This like little melt up through the last couple of weeks. So again, I keep highlighting some of these technical levels. I'll just point them out right here again. If you're watching SPX, if you're watching SPY, I'll go through all these major indexes where I think things can go. It's not that difficult. If you put the same indicator on your chart, it's a 21-day moving average. Okay, a 21-day moving average and a 50-day moving average. They're right here. So I'll highlight these in black. So those are my two levels. And then we have our previous highs right there. So value-wise right now, that's a near-term pullback to around 62.50 on the SPX. or a pullback to around 61.10 on the SPX, with the previous resistance being around 61.45. So that to me is whenever this thing turns, whenever we have a bit of a correction, whatever makes this market flinch for a second, I think a pullback towards 62.50, which is another 140 points lower, or a pullback of somewhere between, almost 300 points now to give us a pullback towards the 50-day moving average. There's a lot of support in this market. That's fine, but I think the market still has to have a correction. So I mean, realistically, I think we have if we squeeze any higher with like aggressive bullishness, that is going to be something I would like to fade. But again, fade it with options, fade it with defined risk, nothing silly, right? So I'm not trying to be a hero. I think it's silly to call the top as much as I want there to be one, and as much as I want there to be a correction. I don't know if it's going to be August something, August 15th, August 29th, September something. I don't know. But we do have to have some type of pullback, or else this market seems like it's broken. We are 60 plus days above the 21-day moving average, which is a lot. We're getting like 30 to 40 year extremes right now on the S&P for that type of move. We're also over from the 50 period moving average. We're almost 295 points above. Historically, that doesn't happen. You can go back on any chart on the daily time frame S&P, look at the 50-day moving average, and see that anytime we've gone 200 points, 220 points, 250 points, 270 points, we usually have a pullback. Okay, so we'll keep an eye on that. So those are levels there in SPX. Take a look at the SPY. Obviously, similar correlation. So looking at a pullback minimum on the SPY to around 623. That's about a 14-point pullback. We pull back to previous highs. That's 613. And we have the 50-day right here around 608. So I'm looking at about a 20-point pullback or so on the S&P. That'd be the SPY. Go to the Qs. Also very similar. We broke above the 21-day. We've been staying there the entire time for 60 plus days. Minimum pullback to around 555 on the Qs. That's a 12-point pullback. 50 period moving average 538. That's a 30-point pullback. It's 29 points right now, and previous all-time highs at 541. So at the very least, something that gets this market to poke the highs and fall. Timing wise, it could be a couple things that line up next week: FOMC, non-farm payroll, tariff deadline. Maybe we get through the end of the month. Maybe we just have a flinch into the end of the month, into the first part of August. But I think if we make a high for August 1st, I'm just going to take some trades to try to short that high. And probably do something where it's like, if I can risk, let's say I risk $2 to make $3, I'll take that trade. I'm trying to make it so I'm not taking on a silly risk. I'm not trying to go out of the money here, let the market catch up and give me more risk. I'm gonna try to get paid more reward than risk if I take a stab at the tops. Okay. All right, that's Qs. The Dow is a little bit different. The Dow poked the 21 period a few days ago. We are not quite at the highs yet, so Dow has a little bit further to go. All-time highs around 451.73. Pull back again, kind of the same levels. If we pull back to the 21-day, that's around a 7-point pullback. We pull back to the 50-day moving average, that is around a 15-point pullback. Again, do we hit highs here, poke the highs, and then fall back down on the Dow? Still, this looks like a potential bullish pattern. If we have this bullish pattern and we get a pullback, there's structure here for the left shoulder. There would be structure here for a right shoulder. And if the market can hold this level and hold this right shoulder, then we get back to the head and the neckline, right? If we get back to the neckline here, we break that neckline, there's still upside on the Dow. I think there's also the camp of, is this a top? Is this a double top? Does the market drop all the way back down to April lows? I don't know. If we're going to see a real breakdown in the charts, this Dow would have to be back below 415. If we're going to see a real breakdown in the charts in the S&P, the SPY would probably have to be back below 570, and the SPX would have to be back below 5700. Okay, if we hold this area anywhere between like 6100 and 5800, if we hold this area, to me this is a pretty strong support zone. If we hold that area, if we break below 57 and we don't immediately snap back above it, then be on the lookout for more pain, especially if it's like, break, pause, and that's a bear flag and the market just dumps, then yeah, we break below 5,700. I changed my tune. I think we look a little bit more technically bearish, but I think if anything, we just have a bit of a pullback. We'll see how aggressive the market wants to buy the dip. But we're probably running out of some momentum here in the 65 to 6,600 zone, unless this market is dead set on trying to get to like 7,000 this year, which might be the case, but it might be a very slow grind into sideways August, September. If nothing really drastic happens through that window in those 60 days for August, September, then the market might still have a good seasonal push through Q4 and maybe very little disrupts it. I just don't think through August, September, we continue to rally hard. I don't. So I think a pullback is needed, or else we are literally breaking like 40, 50, 60-year runs of correlations that usually don't break. I mean, when you point out like, hey, it's been since 1985 we haven't had the S&P melt up over 60 days past the 21 period moving average. Well, I kind of note that we could still obviously go a little bit further, but I don't know. I just think a pullback is needed, especially this time of the year. Okay. Russell. Russell is built a little bit differently. This has been, on the right-hand side of the trend line. We're above the 200 moving average. That's fine. We have some strong support here back around 212 or so. Maybe a pullback into the same area. The 50-period moving average is around 215. If we pull back to the backside of this trend line, there's a lot of strong support back here. That'd be right around the 200 handle. So I could see between like a 210 and then trying to go higher. Or if we have a high, low, lower, high, lower, low, we find a 200 support, base around that 200 support, and then go right back up and see if the Russell can catch up. Right? What's going to be the Russell's biggest benefit in 2025? If rates come down and it allows companies that are not profitable, needing the cash to borrow, needing cheaper interest rates to borrow, more cash runway, more debt runway. I mean, that might help the Russell. That could be a catch-up trade after the Fed. If the Fed starts cutting in September, possibly again in December, and the markets take it in stride where the actual yields go down, not just the short end of the curve, but the long end of the curve. If yields go down, I think that helps the Russell. I think that helps lift the markets up a little bit. Okay, so I'm still looking for some pretty strong support in the market. I just want to see a bit of a pullback. Okay, VIX is down to 1506. Let's go VIX. On record, the largest VIX crush since the highs at 60. Largest crush ever. Crazy. So we pivoted very hard off that April 7th bottom and April 9th rally. Bob, how dark of a place are you, and how big is your trade? What's the level you need? I mean, I've got a trade for daily profit at 63.95. We're trading at 63.94, so I've got some risk in. Okay, but there's my line in the sand. It'd be nice to see a price will stay below it today. I'd love to see that. In fact, I could see price, maybe tapping 64 and then trying to fall for the rest of the day. I'm hoping that's the case. I do want to see price stay below 63.95 for my profit. Right now, my position is down about 170 bucks. So I pulled the trade in for $1.45. It's down about $168 right now. Like I said, I need this to stay below 63.95, which I'll find out here in the next 42 minutes if it does. Hopefully it does. If it is another, and this is unusual, but it did this on whatever day it was this week. I think it must have been Tuesday or Wednesday. What was the day? It must have been Wednesday right here. That trade right there, we came right up to our threshold and we closed less than $1 away from our strike. Okay. Today, the same thing. Now, 63.95 and 6,400 are not necessarily the highs of the day based on the VIX. So, realistically, this market could, and I don't know if it's going to for the next 42 minutes, but this market could push up into 64.05, 64.10. And I'm kind of willing to fade that move a little bit late in the day, but it's very difficult to get a hedge in here by the end of the day, or to say like, well, I'll go out on Monday. Monday's a new day. So I don't need to do anything drastic. If I don't get the fill that I want, I'm not going to take the trade. I've been looking at this trade all morning, selling a 63.70 call by 64.20. That's 50 wide, and it's right now trading for $25 credit. So I could take this trade, and fingers crossed, the price will stay below 63.95, and I'll make money on the trade. But if we go up to 6,400, 64.05 in the next 40 minutes, I'm just going to take on more risk that I don't want to take. So I'm just going to be patient right now. I mean, realistically, if I'm down 170 bucks and that's where it closes today, so be it. But if it stays right where it is right now at literally 63.94.97 or 63.95.07, I mean, I'll still make money on the trade. So if we're somehow right at 63.95, this thing can cash settle and hopefully give us a couple of bucks. But let's see what these final 40 minutes look like. I really don't want to see a flush up to 6,400 because there's not much I can do in the next 40 minutes to make that a good hedge trade. Because that's not the top. That's, to me, like the top would be like a 64.20 today, a 64.25. That's the top based on the VIX. I'm not gonna force a fade and hope. It's like, look, if I lose a couple $100 today, I lose a couple $100. I'll come back and trade it on Monday. But I'm hoping that we can hold around this like 63.95, maybe tap 64 and then fall, 5 to 10 points before the close. That'd be nice to see 6400 actually act as something, because all week I've been watching 6400 be resistance all freaking week. And so now we have these lines in the sand. We have these lines in the sand. 6400 is a massive gamma level. So I can see it trying to test it, but hopefully it's a test and a bit of a fade. And if we're at 6,400 and we fade 5 points, I can still keep my profit on the day. So, Bob, I'm not sure where we're at, but a dark place right now. I don't know what that means. Tell me your trade, and we'll talk through it. Okay. If you were long today, easy peasy, right? Market started off here around 63, 69. Didn't fill the gap at all, just kind of rallied up. So VIX was down. Initially, VIX was what's kind of crazy is the VIX was down this morning. So we started opening. Where the heck is the VIX at this morning? Here we go. Let's go back to the morning. So VIX initially was starting to go down for the first 20 minutes or so, and that's probably your sign to get long in the day. Right around 10 o'clock, if we get like a VIX, the VIX is going lower for the morning from that 9:30 to 10. The VIX is down, then generally that market's going to continue to go. The VIX goes down, the market goes up. Okay. But look, I'll take this thing all the way into close here for the next 40 minutes, and we'll see where it closes. Obviously, if we get a nice little push to the downside here in the next maybe 10, 20, 30 minutes, if we push back down at all, I'm going to look to see if I can get some profit. Maybe I can grab a quick 30, 40, 50 bucks and eliminate the risk. And if I do, great. But if it's up into this area, I'm just going to watch and see what the damage is for the day. Hopefully not too bad. Okay. But to Bob's comment, no trade should be that. No trade should be dark place. No trade should be, oh my gosh, what do I do? Then you're trading too big. Manage the risk. Money's easy to make if you manage risk. You make stupid decisions when you're over leveraging and trading too large. So know the risk. If we pull back, I'm gonna move this down here to about 63.91. See if I get a chart alarm to activate and just spot check my prices. So a little fade off that like 63.95 or 6,400 today would be excellent. We'll see. I'll know more in about 38 minutes at the close. All right, currency strength today. We have Swiss and dollar and euro on top. We have the New Zealand in the middle. We have the pound the weakest. Aussie, CAD, and yen all together as well. Not a ton of volatility. We are still looking at a lot of day-to-day low volatility in the currency market. We have not seen any real numbers over 100 on this vertical axis. Outside of maybe an outlier pound move, an outlier yen move, it's just a very, very quiet currency market. Something also tells me that I've seen that happen before. This happened back in 2013 and 2014. We had a very, very low volatility environment, and everything changed on the dollar. The dollar got very volatile and very strong in August, September of 2014, and everything pretty much like doubled in volatility. So is that a risk-off tone in the market? Maybe. Maybe August, September is a bit of a ventilation. I keep using that word, but I feel like that's what it is. It's like coil, 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 melt up, melt up, melt up. Eventually it's like pop something just to let the market fall and like stop drifting. Like at some point it's like gravity has to take over. It's like we've been thrusted into orbit for a couple of drifts, and that is still just, it's like we're astronauts just floating, like, here we go, 6350, 6375, 6400. Like, does it stop? I mean, at some point, yes. It's just when, how, what, you know, and we never know. But something will pull it back. There will be something lined up. I don't know. Maybe MAG7 next week is disappointing. Maybe guidance on that is disappointing. I doubt it. I feel like this whole market's just, the narrative is greased to try to make things sound like everything is great. Give me 1 second. Okay. All right. What are the charts you want to take a look at? So currency strength, let's go to dollar index. Let's go oil, gold, silver. We're trading at 97.64 on the dollar. I could see the dollar being very messy for next week with FOMC and everything else. FOMC, non-farm payroll, everything lines up for next week to be like a pretty big volatile week. Um, if you'd like to join me for some live sessions, I'll talk about that in a little bit. I've got a couple of special edition sessions next week as well. So every single day, I've restructured my schedule in the mornings where I'm doing a live daily profit plan every single day. This starts at 9 a.m. every day. You can join me through my Telegram channel. You can join me on youtube.com/financial wars. And we're going to go from roughly 9 to 10, 9 to 10:15. Actually, no, we're going to go like 9 to 11 every day. That was the whole point. I'm doing like a bigger block. Sorry, I was stuck in my old schedule. So about 9 to 11 every single day. Okay. I highlight some of the services that I trade and run. These are all members alerts services. So I trade every day with members in daily profit play. I trade every week with members in waterfall income. We're pricing out earnings and major news events every week. We're looking at big upside, like high reward, low risk trades. I have a scanner that keeps spoon feeding me great trades. We had, I think, 3 winners close out this week. And we took, I think, 2 more trades on Tuesday or Wednesday this week. I think watch this Wednesday, we took a trade on pinch point. Crash insurance, I added a hedge this week. Project options edge, we had 4 winners this week. And we took, I think, 2 or 3 extra trades as well. So added trades on CMG, Tesla, T-Mobile. Had a winner on Coinbase. It was a Coinbase, CrowdStrike, and Google this week had winners. So pretty nice week overall. And then anyway, so it's just there. But this is a way that we can all get together, talk shop. I'm also doing trading lessons every single day, finding your break evens. We did a little segment on covered calls. I'll get into debit spreads and credit spreads. How about rolling calls? We spent some time today on what to do when assigned. We spent some time this week on learning at the money, in the money, and out of the money. So you have questions, you have whether it's concepts, theories, strategies, tell me, and we'll talk about them. So we've got, trading, education, and kind of everything to spend some time together every single day. Cool. That's daily profit play. I'll share my Telegram at the end of today's session. It is free to join. So my Telegram channel is all right here, and I post actively every single day. Here's my summary: daily profit play, 7 free winners, and I've got another 2 trades pending. So maybe it becomes 9 for 10 this week. Project options edge, 4 winners. Pinch point, 2 winners. Newsbreakers, I had 1 winner on Google. I did take a loser on Tesla because I was assigned the shares. I'm going to repair that stock. I have the shares of Tesla. I'm going to repair it. My goal is to try to flip that thing for $1,000. Also close out shares of ETHA for a winner. Rolled a covered call on SLV. I took about 100%. It was like 99.8% profit on my covered call. I'm going to roll it out a little bit further. And then Intel did the same thing for 98%. Okay. All right. Good stuff there. So I'll share that link here in a little bit. Also, next week during FOMC, let me see if I can find this on. I don't know if it's going to log me in or not. Maybe it does. Maybe it doesn't. If it logs me in, then I will show you. That's not going to. Let me see. Nope. Okay. So the trading battle. I'm going to be in a trading battle during FOMC on Wednesday. We should start the session around 1:30 p.m. I think it's around 1:30 p.m. We'll get started. We'll get our trades like ready to rip. Yeah. Keep an eye on this for next week. I'll share more in my Discord. I'll share more in Telegram. But if you'd like to join me, this is going to be a free session. I'll be battling it out with Akil Stokes and Nick Sayak is hosting, so it'll be a lot of fun. And we'll see, who the best trader is. So I was on here a couple weeks ago with Blake Morrow. We did the FOMC back in June. That was like the June FOMC. Now we have the July FOMC coming up. So a lot of volatility, plus MAG7, plus non-farm, plus the tariff deadline. I would say surely enough to get the markets moving, so that's a good thing. We'll see what happens in the currency space. We'll see what happens in indexes. We'll see what happens in individual stocks. We'll see what happens in gold. So it should be a lot of fun. All right, that's the dollar. I still don't like selling the dollar. I think the dollar catches a bit of a bid here. Not a lot, though. I think the dollar going up to like 100 is a nice recovery. 101 to 102, I'd be then looking to kind of fade the dollar unless we have like a big push to the upside. Something tells me that if the market is really going to be in a secondary market for the dollar, that we're going to have a flush up first to then short bigger. I think if the dollar goes lower from here, so what I'm saying is I would like to sell the dollar at a much higher price to actually trade the trend of the dollar. But if what we have instead is we poke the lows, poke the lows, poke the lows, poke the lows, to me, this is more of a wedge and this thing squeezes up eventually. And I would like to be long this recovery and then look to see if I can get confirmation to then fade it back down. But I'm basically not shorting the lows of the dollar. I think it's a little bit overstretched. I think in the technical land of currencies, it's oversold with divergence, and there's lots of pivots and pockets to trade back to. So I'm at least expecting this dollar to pull back a little bit towards the 100 to 102 handle. Okay, oil. Oil is down around $65. This appears to be still pretty solid support right now. I think the bottom for oil is in. I do have a trade running on CL futures right here. It's up. It's break even, like $10. This trade should be worth about $220 of income. I need oil to stay above $50. If we stay above $50, which is obviously at some fresh lows, then that trade should work out for me nicely on CL. Natural gas. I do have a diagonal spread here up to 2027. I'm just actively lowering my cost basis a little bit, trying to get this thing for some income. Gold. Gold has turned hard these last couple of days, and the dollar hasn't really budged. So gold is down for 3 straight days, right back to the 21 period moving average. Actually, no, 50 period moving average. It's still pretty well supported. It's still well supported here and here and here. However, let's say that gold breaks. Heaven forbid gold breaks the 50 period moving average. But if it does, there's obviously room to flush down here to the 100 period. If we flush down to the 100 period, there's room to get to the 144 and the 200. To me, as an opportunist, okay, I would love to buy gold at the 144 to 200 moving average. The trades I have running on gold right now are basically combinations of puts and ratio spreads. So if I'm to take shares of gold, I'm going to take shares of gold based on GLD at the 200 moving average, which is around my strikes are like 270 something here. Let me double check my GLD positions. GLD is here. I have shares up around 20K in GLD, and I have a 111 that is up. I should have $300 income. I've got a 270, 265, and 230. So it's a $300 income trade. That's a pretty high probability. And then meanwhile, I have the shares of GLD. If I have pullbacks, I'm going to buy some more shares. If we have pullbacks in gold, I'm going to buy more shares. I just refuse to let this technical overextended condition at 400 plus bars above the 200 moving average. I refuse to buy this thing at these levels. So I think if the market pulls back, great. We've been running hot for about 450 bars. I don't know how much higher we go without having to pull back at least to the 200 moving average. So whether we go, bounce here, rally up here, and then fake out and it gets really volatile, or we start to see that, maybe there's some momentum that picks up to the downside, gold gets a little bit more attention for like gold is falling. What's going on? Maybe the dollar catches a bid. But to me, if we can get gold to find some major support, I'd love to scoop up some gold, take it back to highs. I think gold has good upside. I just want a buy level. I want a pullback. I don't think that's too much to ask for. Okay. All right. Silver. Silver has rallied to some highs again. We're at 35 or 39.55 recent highs. To me, any type of pullback into these moving average clusters looks pretty good to buy more silver. I really like silver into these dynamic levels. So if we pull back to the 50 or the 100 or the 200, I'm looking to scoop up some more silver. I may also take some stabs at silver futures, which is SI. So if we pull back into this area here, I might look at some trades where I can set stop losses below the low and then take advantage of a spread trade that gets me back up to, line in the sand as long as we're higher than that, or we make some fresh highs in silver. If this bull market continues, I think it looks pretty good. So a pullback on silver is fine. I just think a pullback into dynamic support is even better to buy nice and low. So if you like the silver market, anything in here looks good to buy. Stop loss tightly below, or make sure you have like a close below, close above, stop loss there, and then go after highs. Follow the trend. Okay. I like silver. Bitcoin down from the highs at 123 to 116. I think we could pull back to like 112. I think we might pull back to like 112, 110. If we pull back a little bit deeper, I have some concerns. Depends on what the stock market does. But if Bitcoin continues to, try to find just a little consolidation here and then a run back up. I also don't know if like volatility is being suppressed on Bitcoin because so many calls are being sold. If all people are doing right now on the securitized instruments like IBIT and FBTC and some of these like MSTY or MST whatever the hell MicroStrategy is doing with all these like financial engineered instruments, if all it is like premium sell, premium sell, premium sell, it's going to suppress volatility. It's going to keep things. Now, I think that we had a squeeze because we ran through some of those levels. But if it just continues to be like throw on more covered calls and just cap the upside, it might be like a low, low appreciation, and that's okay. I still just want to be aware, like Bitcoin should still hold like the 112 level or the 110 level. I don't want to see price go too much lower than 110 without maybe taking a step back and seeing like, all right, well, maybe we have a deeper pullback coming. Okay. But to this trend line, which I have right here, this big black trend line, if we continue to go maybe parallel to that, okay, so let's go parallel, something like that. Could we pull back deeper? Sure, we could come down here. We could have a reversal pattern. We can come back and find some inefficiencies back to around like the 90K mark, but I still think that's a chance to buy low and then see if we can make some higher highs in Bitcoin. I still think the technicals are pretty solid. I think like the story is still pretty solid. If the U.S. is going to have to print more, add to the money, add to the money supply. If the world is adding to money supply, and we're going to continue to debase and kill purchasing power, Bitcoin still has a good story behind it. So anyway, it's just a big hedge against fiat, along with other things. But I think if you like the Web 3.0 play, if you like AI, if you like the future, if you like the play against decentralization, if you like the play against the fiat system, Bitcoin's not a bad way to have some exposure. Okay. All right. What else? IBIT. I did buy some shares today at 66.10. 66.10. I bought some shares. I have a pending order at 61.75 as well. So I bought some more shares here. I'm going to add some more shares here. And then I'm also looking for the 200 moving average here, here, here. So area 1, 2, and 3 to add more. Whether I buy shares or I just add puts like naked puts, I might do that. And then MicroStrategy, we have earnings on it next week. I wonder if the market's going to treat this with a bit of a Bitcoin angle with earnings next week, or if it's going to be like, well, MicroStrategy is a tech company that'll make money, and the market takes it lower. I mean, look, earnings here, a little lackluster, but it pops up because of Bitcoin. Earnings here, it was all Bitcoin. Like all of this was Bitcoin. So I don't know if what MicroStrategy does as what was formerly a tech company is now just basically a big old proxy for Bitcoin. We'll see how earnings treats that next week because it'll be Thursday after market. All right, so we'll keep an eye on that one for next week. Coinbase had a nice window this week on Coinbase. We had a trade in Project Options Edge where we need a price to stay below 455, and it did. So we're taking full credit on that today. It's going to expire for full profit at 58 cents. So nice little window there on Coinbase. Ethereum pausing near these highs. I took the shares off at $29, which wasn't bad considering the high was at like $29.26. A pullback is fine. I mean, I still think this, if anything, this could be just a big bull flag. So this run, maybe some consolidation. If we got some active Ethereum traders, like that looks pretty good to maybe start going towards all-time highs. Okay. I don't love that trade, to be honest. I bought Ethereum down here and it ran up very nicely, and I took a 47% winner. I had some traders that followed that trade with call options, and they were up like 125 to 150%. Call options did very, very well. Okay. The own shares, I mean, 47% return on a stock or an ETF is really, really good. So I'm happy with that overall. To me, that was just a trade. I like Bitcoin better. I have more exposure on Bitcoin. Okay. Copper. Wow. Even with that 50% tariff announcement, copper had that big distorted move, came back down. I told traders that don't be surprised if we test the highs. And you go back a couple of weeks when this first happened, this would have been like the 9th and 10th after that announcement. So we had the 50% tariff announcement on July 8th. We had a big pullback here. You can look at this. This is just really good price action. And again, just kind of believe in what the markets can do. Take that low to high swing. This market pulled back right to that 382 to 50 pullback zone. So a nice little, efficiency pullback right around the halfway point, and we tested the high. That's a great trade. So there's two ways. Like either one was you got the efficiency trade in here trying to retest the highs, or now you want to see if the market's going to stall at the highs and go down. Right? Either way, I wouldn't take a lot of risk on copper. Okay. In fact, let me see something for next week. If I go let me see if I can get a trade in here. Like maybe we stay below 5.95. Let me check a copper trade here if I can get a good reward to risk. Copper for, let's check the expirations. Copper. The 28th is going to be Monday. So we only have monthlies here on copper. Oh, fudge. All right, so Monday. I don't think I'm going to get the trade that I want, but let's see what it prices out to be. So the high is around 5.95. So if I buy that, sell that, I can make $362. Am I willing to risk about $400 on this trade? What do I make? $37. I make $37 to risk 460. No, I do have a profit trap of $287 if it's inside these strikes, but that's a terrible setup. If I take on more risk, it's going to be just totally a skewed trade. So I risk 712, and that credit doesn't go any higher. That's insane. So no trade on copper. That's stupid. All right, never mind. Yeah, I mean copper. It's like you can't trade it. I think the bid ask is a little silly. If I guess if I wanted to, I could just call the top here at 5. Let me see this 596. I could do like a sell call here and a buy call. And what would be my 0.01? What's that trade look like? So I get 250. How wide am I? That's not right. So maybe a 0.05. That can't be right either. Seems about right. Yep, so that'd be a 1-to-1. So if I wanted to take this trade, if I put in a 0.0050 fill, I'm risking $125 to make $125, and that would I'd see if copper can hold that resistance. So if we test the highs, which is around 5.95, and we hit that high and then fade, I can make that trade work out. But if copper's like, we're just going to go up here it's a trade on Sunday night to Monday. I don't think that's going to be a fill. That's probably a stupid trade. So never mind. I'll find something else. Wishful thinking, but I don't like it. Japanese yen. Nothing too exciting on Japanese yen unless price can come down into a more attractive level. I think this is a great way to buy the Japanese yen if we come down to these levels. So this trade, I can get rid of this one. This was a profitable trade from earlier in the year. That was profitable. So if a Japanese yen comes down to these lows again, I'm going to look at owning or putting on a spread trade on 6J and just paying a one-time thing, pay my commission on the futures contract, and then look to hold this thing and try to get a nice profit. So, I mean, this is the inverse of the dollar yen. I still think that the dollar yen is looking for a larger head and shoulders. If this structure ends up breaking, or we get to the neckline, let's say that we, break up to this neckline, we go above the neckline, this thing is going to be a big move to the upside. The dollar yen looks like this, right? If the dollar yen holds these levels, but it breaks 140, we're going to 120. So if we break 120, that means we're going somewhere way the heck up here on, whatever this is, 0.008 roughly on the Japanese yen futures market. But the best way for me to trade that is if I think we're going up. If I think we're going up, then I look at a debit spread here. If I think we're going up, I look at a debit spread here, right? Try to get some asymmetry where I can risk less, make more. A couple of entries, maybe a 1 contract trade versus a 2 to 3 contract trade. So I can lose here and lose gracefully and then win and take that loss and still make, 2-3 times the income. Right? All right. So keep an eye on 6J. This is going to be one for the put a pin in this one for the future. DAX still stalling at these recent highs. I still think a pullback is needed kind of across the board. FTSE, wow, UK has made a nice surge above these recent all-time highs. I mean, it is what it is. Like, I'm not trying to call the bottom here. I was hoping we had a better pullback on FTSE, but we didn't. It just tiny little pullback after that reflexive rally through April. So April's low all the way up to June, a little pullback, and then off we go. FTSE is now up month to month. Look at this thing. So the FTSE for the year after that correction, so we opened here, FTSE is up around 12%. You go to the DAX, I think the DAX is still outperforming. DAX is up around 22%. Go to Argentina, year's flat. But we also had like an 80% year. Argentina for the last 3 years, look at this thing. This thing is up 170% in the last 3 years. That's pretty ridiculous. China year to date also doing pretty well. China's up around 26% year to date. Okay, Brazil is up on the 12-month, so we got a little gain there. Let me take a look at this on the daily. So we're trading, we're right at the 200-day moving average. I was hoping that with this little pop up to the upside through the 200-day moving average, I was hoping that we would stay kind of off these lows, sideways, and we have some higher levels. I think for Brazil to really get a big run, we have to see a run on commodities. I think we have to see a run on commodities. I mean, if we have like platinum up, gold, silver, you know, I don't know about soybeans, but like if oil is steady and stable, natural gas maybe. But if you have a big run in commodities, Brazil and Latin America are good ways to play that. Lee, do you think the dollar's current move is only a corrective one because of moving down to 90.95? I mean, I think that the bigger play on the dollar is if the dollar gets down to like 90. You know, I think the dollar has potentially the round number handle at 90, which is another 700 points lower. You know, but I think to me, it's if the dollar is going to make that move to the downside. If we're going to make a move to the downside, most of the time we see market makers and big order flows will flush the dollar up, okay, or push the dollar higher, only to top it out and bait everyone the wrong way. Because right now, if everyone's still trying to sell it, well, it doesn't seem easy. It's too easy. Sell the dollar, just goes down. Sell the dollar, goes down. Sell the dollar, goes down. It just goes down. That's too easy. It can happen. I guess it can happen, right? But if the market goes, okay, squeeze on the dollar, everyone that's short is now going to be chasing or covering. You get this squeeze up, and then smart money is going to be fading this thing and then taking it back down to the lows, which is a great profit target. And if it goes lower, that's an even better profit target. Let the winners run. So as I'm saying, I think that the bigger move, I mean, we hit symmetry here, right? So let's say I'll just copy this. So we take this move here. We take this move, and you have a high to low swing. You have a lower high to lower low. And wherever this thing ends up pulling back, if we pull back to like right here, and then we go down again, well, let me just drag another box. Let's see what that symmetry gives us. I'll take this. Let's say that we pull back to around, 101. We pull back to like, look at all this. Past support, past support, past support becomes resistance. It's back around 101. If we hit 101 and then flush lower, look where that gets us. 87. 90, that's a round number. That's right in the way. So I could see like, wave 1, wave 3, and wave 5 all having symmetry. Dollar gets to 90 or lower. So I mean, I still see the dollars like potentially in a reasonable bear market as long as we stay. I'd say we have to stay below 102. If we stay below 102, this dollar to me is still bearish. If we squeeze back up to 101 and drift into 102 and we start breaking above 102, I think we put in a bottom, and this is going to be a large bottom with the big noisy fake out, and then the dollar pushes all the way back up to like 107, 108 again, and it's just a big range, right? Yeah, that's correct. So if this is wave 1, this is wave 3, this would be wave 5. So that'd be the push down to like 90 or lower. I've got a symmetry level at 87, but 90 is also a massive. Look at how strong that support is. Strong that support is. That's right at 89.76. So right at 90. Really good round number. Okay, this is going to be my more important chart of the day. Hold below. I'm like William Wallace in here. Let's get it. Let's get a William Wallace. William Wallace. Hold. Let's get an image here. There you go. That's what we're doing here for 63.95. All right, we'll come back to that. But if I'm going to make $1.45 today, that's where it's going to have to hold. Currently, position is, let's go SPX. We should only have like a couple dollars left in the expected move today. I'm just hoping that we don't have like a stupid move here in the last 10 minutes to the upside. I'm hoping it just fades. So right now, positions, I'm down 20 bucks. But if it closes where it is right now at 6393, I'm going to make $145. So this could very quickly here the last 10 minutes offer me some profit. I still have my profit set at 45 cents. So if there's enough of either a little bit of a push lower, I could quickly get that dollar out of this. So I'd love to see him move down to like 63.90 to kind of wrap up the day. There we go. Just a little tiny push. And now we're seeing some profit. Okay, we're hitting 91. Let's go down a little bit to end this day. Now we got a few bucks profit. Okay, we'll keep an eye on this one. Again, we're down to the final 10 minutes. I've got about $4 of wiggle room. If we fall a little bit lower, that's good. So we're hoping we hold 63.95. VIX is not really doing much. We're turning over slightly on the 15, which is encouraging. We're turning over slightly on the 5-minute, which is encouraging. I just don't want to see price do this. Hit here and then try to rip right back up to 95. But as long as it holds that high, hopefully we hang in there for the day. Okay, and we have the final 9 minutes. So let me get two things here. Let's go Eastern time live clock. There. So it's 3:51. So I'll count this. I'll count this bad boy down all the way to the final 4 p.m. close and see where this thing cash settles. Okay. Now, if we get a little push lower, it's possible that I hit my 45-cent debit today, which will give me $100. Okay. So I'm going to hang in there and see if price will push down a little bit more. It's looking better. It's looking better, looking better, looking better. So that's encouraging. Right now, I'm seeing about $75. You know what? Probably a smart thing right now just to take some of that profit off the table. I'm at 60 cents. I think I'm just going to close this thing down, not worry about it. Give me 60 cents, baby. 60 cents. Come on, I'm below the mid price. 51. Come on, Tasty, you're better than this. I'm going to go 55. Come on, broker. All right, I'll take 60. That'd be 85 cents. Come on, we got 8 minutes. Tasty, give me some liquidity. 47. I mean, I'm looking at this mid price way below. Fill my order. All right, this is what gets exciting with that line in the sand. Come on, 60 cents. You can do it. Trading at 44. Mid is going lower. That's good. 41. Come on. This is looking way better. Now, are we going to go in 7 minutes and rip all the way up? You know what? If it's not going to fill, I mean, the hell with it. I'm going to put this down to 50 cents. See if I can take close to that $100. But if it's going to push lower, I mean, in 7 minutes, are we going to rip all the way back to 95? I hope not. No, this should have moved the expected move a little bit more dramatically. So now we got this tiny little expected move up here. Okay, if I zoom in on, I'm going to zoom in here. We're going to get real close. Okay, look at my expected move. So we got this tiny little expected move here for the final minutes of trading. My 95 should be safe. And this is my debit at 50 cents. It's still not filling. My credit was $1.45. So if I can close out here, that's going to be 95 cents on the contract. But we still have some of that, value baked into it. I might just have to have this thing settle in 5 minutes. I don't love taking it all the way to the close, but sometimes you have to. So come on, man. All right, I'll try one more here at 55. Gosh, when it was down to 41, I thought I could get out of here at 60 cents. I'm kind of shocked it's not filling. All right, final offer 60, and then I'm just going to take it into the close. 49 mid, 60 cents debit, 36 cents. push lower. Like maybe this thing doesn't fill me at all. But if it's pushing lower, yeah, that's good. Let's freaking go, man. 50 cents. And if we get to the final minute, I'm just gonna delete my order and let it cash settle, make 145 bucks. We're down to 20 cents now. 18 cents now. Let's go. 5 minutes left. No shenanigans, no whammies. This is good. This is great. I mean, come on, dude. This thing's trading down for 6 cents debit. You got to be freaking kidding me. 10 cents. 15 cents. Close me out, Tasty. 20 cents. I can't get this thing to close me out. Well, the good thing is price is now 8 points away from our line in the sand, so we can thank William Wallace for this. Not done yet, though. We are not done yet. So I need price to stay below this blue line, and I can let this bad boy cash settle. All right, we have it's 356. That's a good clock, right? Jeez, oh Pete's. 356 and change. I feel like this doesn't work very well. It's not a very good live clock. Actually, it's probably better here. Right now, we're at 63.89. I've got 3 minutes left. Don't do anything stupid. Come on. I'm still trying to close this. 20 cents debit, trading for 6 cents. Like, I'm going to wait and see, like, will they fill me in the next 4 minutes? This is wild, man. Like, how do I not get a fill at 20 cents above the mid price? Stay below 95. All right, 357. Creeping into those final minutes. All right, who's with me in this daily profit play stuff? Got about 900 members in my service that are probably wondering, like, why didn't Chris close this trade out? Well, because I've been holding it all day. Do not go above 95. And right at 4 p.m., we'll look at this thing to cash settle, and I'll see what the price is between TradingView and my dynamic trend software live price from it's QuoteStream Media, as well as the feed of my broker. So as long as we're below 63.95, then I can bank on this winner. So right now you're showing I'm up like 140 bucks. I want it to be there. I'm trying to close this thing out. All right, 358. There you go. Bill Williams says close out at 0.5 today. Nice. Did you get in with me at $1.45? And when did you exit, by the way? Did you exit back here? Was it early in the day around like 1 p.m.? Because I saw that. I was up like, 50, 60 bucks. But if you got a 0.5 out of that, that's like 90 bucks, man. That's good. Okay. There we go. That's a nice little push. That's a nice little push. Keep that thing contained. So for the day, we opened here, pushed up around 0.5%. We're fading a little bit into the close. That fade is a beautiful thing. Stay there, push lower. If we're into the final seconds here, it's 3:59. We've got 50 seconds left. All right, here we go. We're going with no seatbelt. Canceling the order because I'm going to get this thing to cash settle for 145 bucks. Final minute. That was pretty surprising, actually. I saw it trading down to like 20 cents, 15 cents, 10 cents, and even going like 10, 20, 30 cents above the mid price. I couldn't get filled. But it does look pretty good here for the final 27 seconds that it'll stay, 7 points below. Yeah, this is good. All right, we're good. 20 seconds, looking better. Fade like a freaking, just fall off a cliff here for a second. All right, closing bell on Tasty, 7 seconds left, 6 seconds left, 5 seconds left. This is all on TradingView, 89, 88. We're good. All right, everybody, we did it. 6389.15, 388, 6388.67. Looks like Tasty's got a 6388.68. That's going to cash settle for 145. Cool. All right, update. DPP, entry, $1.45. Credit. Closed at expiration. So 0 debit. Keep $1.45. Nice win. Okay, we're taking it. I will take that win all day long. Happy with that. Okay. No seatbelt, William Wallace. It all worked out. We closed at 89. Yeah, that could have, I mean, it was an interesting trade. I could have possibly grabbed, I don't know, maybe $600 or $700 out of this trade here. It was trading up for like $26 credit. That was when we were right at the top around, 63.95. But I wasn't confident that like the top is in it. It's like, it's not. The top to me was going to be around a 64.20 today. So I didn't take that trade, but it's all good. I made 145. I'll take it. I'll take it. I'll take it. Cash settle, cash money. Cool. I always get inconsistency trading lower time frame. I don't know why. In what way? Why not just buy? Well, because there's major resistance at 64. There's major resistance at 64. I'm fading the 64. I think this market is going to give us a pullback. And so what I'm trying to do is, here's why, okay? Let's say that the market every single day, right? And look, don't hit me up with hindsight crap. Why don't you just do this? Well, obviously, if I knew the market was going to go up 0.5% today, I would have done that, okay? But based on my mechanics and the probabilities, the market was probably not going to go too much higher than 6,400 today. So we start here, and the market slowly grinds. What did it do at the end of the day? It fell. Okay. So let's say the market decided, hey, you know what? It's a time for the VIX to take over. It's time for the technicals to take over, and the market goes down 1%. Well, for everyone that's just been buying this melt up and generating profits, that's great. But to me, I'm thinking probably over the next 30 to 60 days, we're going to have like a 3, 4, 5% correction, if not larger. So I am just picking my battles, taking my credits, and slowly fading highs. Because I don't think this market can melt up at a big clip. I think this market melts up where it's calculated to melt up. The VIX is down below 15 right now, which means we are going to get a less than 1% move on the day. So if this thing is up 0.8%, 0.9%, up to almost 1%, I'm going to fade that move. Because that is a high probability that we don't go too much higher than that. Okay. So anyway, yeah. All right. So good. Daily profit play was a winner. That makes it 9 for 10 this week. Happy with that. And made some good cash. This week, starting on the 21st, cleared about $850 this week on daily profit play. I'll take it. It adds up nicely. Let's go trade next week. So, all right, a couple things before I go. Just after the bell, if you'd like to join me next week, here is my daily profit room every single day, 9 a.m. Eastern time. You're all welcome to join me. I stream this on Zoom. So we have a live session in Zoom where I talk to everybody. So if you want to come in, through the classroom, join Telegram here. I also push this on youtube.com/financial wars. So you're all welcome to join me, whatever's the easiest and most convenient. The comments that I see, the engagement that I have in the morning with about 200 plus members is in the Zoom chat. So I'm not reading like the YouTube comments as we're going along. I do YouTube in the afternoon. But if you want to come in and actually ask me questions and jump into my lessons and things like that, then we'll do these lessons. I'll engage in Zoom. Okay, so here is the link for my Telegram right here. So this is Chris Pulver Trading Telegram. There's the link, and we do the daily profit room at 9 a.m. Eastern Time, Monday through Friday. So links to join right there. If you'd like to join my Discord, I have it right here. I'm just going to send this invite out. It's a 30-minute invite because I want to make sure it's not valid in case this sits on the internet when I've got a bunch of scammers and crap. So this will be good for 30 minutes if you'd like to join my Discord. Okay, if you jump into my Discord, please read the rules. Just first things, like read the rules. I don't send friend requests. I don't send direct messages. If you see that initially, just flag them, kick them, ban them. It's not me. If you want to talk to me, I'm in all the public channels. You can ask me questions in the public channels. I'll answer every single day. Okay, but I don't send friend requests. I don't send direct messages. I don't send messages to you on Telegram. I don't send messages anywhere else on WhatsApp. It's not me. Okay, I'm on YouTube. I'm in Discord. I'm in Telegram, and I have my pretty much exclusive channels that I run. All right. So if you aren't 100% certain that it's me, it's probably not me. And you can find me here every single day. Okay. All right. Happy Friday, everybody. Let's pack it in. Enjoy the weekend. Let's come back and do it again next week. Next week's going to be a doozy. I will be in the trading battle on Wednesday. Trading battle Wednesday will be, I think we start around 1:30 p.m. Eastern time. The battle should be from 1:30 to 2:30. Trade should be running for the rest of the week. So I think we have trades running until Friday's close. And let's see what the markets do. A lot of volatility. MAG7, lots of earnings, FOMC, non-farm payroll, end of the month, and Trump and the tariff deadline on the 1st. Very curious how this market plays out. Do we pause and wait till MAG7? Do we have like a bit of a top at 64? Does the market actually care? Maybe it does. Maybe it doesn't. We'll find out. Okay. But every day is something interesting and exciting. I'll just continue to grind and fight the good fight. So talk to y'all soon. Have a good weekend.